In this video, we are going to discuss 10 large cap stocks that have shown consistent profit growth. That is, their 5-year profit CAGR has been in double digits. But more importantly, we are going to evaluate them for future growth triggers. Where exactly is the growth going to come from? So let's begin the discussion by hitting the like button. The first stock idea that we are going to discuss is going to be from the banking space. Credit growth has picked up from lows of 6-7% a year ago to currently more than 15%. And the first stock that we are going to discuss is HDFC Bank. In this discussion going forward, there is a NBFC too, along with stocks from pharma, retail, chemicals and other industries. So I will request you to keep a tab on them as well. But before that, coming back to the discussion of HDFC Bank. Why did we exactly select HDFC Bank? First of all, it is a leader in management of non-performing assets, that is quantum of bad loans. This parameter is sacrosanct in banking. Net NPAs of HDFC Bank has been around 0.35%. Along with this, their return on equity is more than 15% and their market share in advances is gaining as well. But where exactly is the future growth going to come from? The answer lies in the news of HDFC and HDFC Bank merger. While mergers can be painful in the short term, in the long run, HDFC Bank can have customer data access of HDFC Limited for cross-selling. Along with this, they can do business of mortgages as well like HDFC, but at lower cost of funds. Banks, unlike NBFCs, have access to lower cost of funds via current accounts and savings account, and this gives them an advantage. Talking of NBFCs, one cannot ignore a giant called Bajaj Finance, which has been one of the biggest wealth creators. One thing that I have learned about Bajaj Finance is it always trades at premium multiples. Currently, it is at price to book ratios of around 9 times. Even historically, it has traded around 7.5 times price to book ratio. Net NPAs of Bajaj Finance are quite good. In fact, they have grown by more than 30% in last quarter. Their return on equity is more than 20% and operational metrics overall are quite healthy in that sense. Going forward as well, they have guided for more than 20% growth in terms of profitability. But where exactly is the growth going to come from? Let's answer that. Bajaj Finance is one entity that is known for its reach through 1.3 lakh touch points through stores, auto dealers, agents, etc. But now they are leveling up their digital game for distribution of loans, UPIs, wallets, etc. The best part about their business is that they have existing 6 crore customer base already on their data. They are looking to develop absolute dominance in fintech space, just that it will be interesting to see how their digital game pans out. In banks and NBFCs, small caps are generally riskier, but can sometimes throw up interesting ideas. We have discussed one such interesting ideas for our deep dive community join button members. We keep doing technical blogs regularly for them, along with one dedicated deep dive every month. Bajaj Finance has many optionalities in their business as well, through multiple options of consumer loans, B2B, MSME loans, auto loans, housing finance, and now they are venturing into the business of securities. That is stock market related businesses of trading, mutual funds, portfolio management, etc. So this will be an interesting category as well going forward. Like Bajaj Finance, there are many optionalities present in the business of this conglomerate as well. Yes friends, I am talking about Reliance Industries. No doubt, oil to chemicals and Jio are two of their biggest businesses which will support their future growth. But Reliance is focusing a lot along with their digital business on retail as well as the business of new energy going forward. They have committed 75,000 crores of investment to develop entire new energy ecosystem in Jamnagar. They are aggressively acquiring companies as well. For example, they recently acquired Sensok, a tech platform for solar energy. They have done acquisitions of Sterling and Wilson's renewable energy, Faradion, which should give them foothold in battery technology. Government focus and policy support to in these areas like National Hydrogen Mission, electric vehicle focus on new energies and renewables is also going to provide interesting opportunities. Next two stocks are proxies for retail and consumption in India. Rising disposable income, urbanization, young population will all fuel the growth of retail in India. DMart has already been a success story in India with growth from 1 to 284 stores. Now they are targeting 5-fold increase, that is target of 1500 stores. Though the valuations are not at all comforting, but this is one such business which should be at least on the watch list. Titan is another interesting story with presence in more than 2300 stores and 360 towns. In retail stocks, it is very important to check or analyze that the business in which the companies operate, how tough or difficult it is to disrupt them. For example, DMart is the lowest cost seller. Even e-commerce is not able to match the quality and price of it. Similarly, Titan too operates in the categories of jewelries, watches, eyewear. All these categories are categories of touch and feel. People prefer to go out and try them physically. So these categories are not easily disrupted by digital revolution. Along with all these inherent advantages, there is a large shift happening from unorganized market to organized market, and both DMart and Titan are going to be key beneficiaries of this. While consumption is no doubt one theme which is definitely bound to pick up in India, but one business which is cash rich, asset light, and which we cannot ignore is IT. No doubt, in the short term, IT might face immense headwinds due to USA inflation and Europe crisis. There is rising attrition too in this sector. But over the long run, if you observe, COVID has accelerated the entire process of digital transformation. This entire structural shift is definitely happening sooner or later. Infosys, for example, has given growth guidance of 14 to 16% this year. It will be very interesting to see if they persist with this guidance even in quarter 2. Infosys has intense focus on digital side of things, and in fact more than 60% of their business comes from the area of digital. Similarly, HCL Technologies too has a dedicated unit on engineering research and development services. This unit contributes 15% of the revenue. Over here, they basically use IoT, AI, 5G to digitize product and experience for their clients. At PE multiples of 18 to 20 times, risk reward too seems here favorable. One cash rich, debt free business with more than 4 lakh crore market cap and a potential FMCG story is ITC. While no doubt company generates more than 70% of their profits from tobacco division, it is their FMCG side of things that really excites me. ITC has interesting and marquee brands in FMCG of Bingo, Ashirwad, Dark Fantasy. The EBITDA margins in this business are around 7 to 9%. So it will be interesting parameter to watch in future that if the margin expands here or not. And if the margin starts expanding, that will directly impact the profitability. Also, ITC going forward can be a potential candidate for value unlocking through demerger, though this point is speculative. ITC has moved a lot in last 1 year, and this is one such business which should be definitely on the watch list for corrections. But please don't take this video as a recommendation in any form. This video is only and only for educational purposes. Kindly consult your financial advisor before any investment decisions. As we move along, I really wanted to cover some businesses which are proxies of real estate and infra like Asian Paints and Ultratech. However, the competitive intensity in this space is bound to increase with entry of Grasim in paints and Adani in cements. And hence, due to this element of uncertainty for proxies in real estate and infra, I like stories from mid cap and small cap. Let me know by hitting the like button if you want me to cover a similar video of top 10 series kind on small caps and mid caps too. If I get more than 2000 likes on this video, we will definitely do a video on small caps and mid caps too. Next two stock ideas are going to be from the space of pharma and specialty chemicals. Divi's Lab has corrected significantly in the recent times and it is available currently at 30 to 32 times price earning multiples. Its historic price earning multiples have been around 35 times. While corrections does not necessarily mean opportunities until and unless there is growth visibility, and this is exactly what we are going to check for Divi's Lab. Divi's Lab have recently expanded their generic business. Also, more than 40% of their revenues come from custom synthesis business. Custom synthesis or contract research and development is one of the most promising and upcoming areas in pharma. Plus, pharma sector is one sector which is considered to be defensive, meaning rising inflation and lower consumer sentiment in either USA or Europe is going to have limited impact on this business. In a way, it provides good guard against slowdown in global economies. Divi's has recently announced that they are getting into the business of contrast media for radiology. The global opportunity size over here is around $4 billion or 32,000 crores for use of contrast media in radiology. Historically too, for 10-year period, the growth of Divi's Lab has been around the CAGR of 19 to 20%. Like Divi's, there is a chemical company too which is into the business of custom synthesis, making of intermediates for pharma API companies. They have planned a capex expansion of 1200 to 1500 crores over next 18 months. This chemical company has business presence in chemistries of fluorination along with packaging and textile technicals. SRF is going to be a big beneficiary of China Plus One tailwind too. Along with fluorination, green chemistry is one such area which is very promising in the field of specialty chemicals. There is one good business which I have covered in the area of green chemistry in this video. This is one deep dive which you should definitely check out after this.